Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends its bearish trend on Tuesday, its fifth straight session of declines driven by the modest US dollar rally and dovish signals from the RBA minutes that were released on Tuesday. In the September meeting, the Reserve Bank of Australia left its cash rate unchanged at 4.35%. Despite recognising inflation risks, Governor Michelle Bullock noted that a rate hike was not a serious consideration. The minutes released by the RBA signalled a more dovish tone this time, dropping the August meeting guidance, which has suggested that the near-term reduction in the cash rate was unlikely. Investors now turn to this week's key event, which is the US inflation report, which is the US Consumer Price Index, or the CPI, and the US PPI, or the US Producer Price Index. Also on Wednesday, all eyes will be on the FOMC meeting minutes, and along with that, New Zealand's official cash rate decision, which expects a 50 base point rate cut to 4.75%. Turning to the technicals, we can see the market is getting very close to the 60-day moving average, which is seen around 67 figure 30. From this area, some assessment will be required due to the fact we could get a rejection from there and see a bounce back towards 68 cents. Turning to the euro, it still remains under pressure as the dollar index hovers around the near 6-week highs of 102.50. With most European central bank officials continuing to stress the need for further rate cuts amid a sharp slowdown in the eurozone, inflation may see a little bit more to the downside, where it could look towards the region of 108.80, but initial support is seen at 109.40.55. If we do see a bounce, then it looks back towards the region where the break was around 110.20 area. The rally in dollar yen has paused and currently slightly mixed due to the fact that we did see a rejection from 149, and if we see a return there, could see a rejection again from the resistance seen at 149.15.25, and if so, could see the move back towards 146 to 145 as initial target. The decline in the pound has also paused and finding support temporarily around 130.35 to 50 area. Given the fact that we are oversold, the technicals may imply that we could see a bounce back towards the region of 131 to around 132. But that being said, a break of the level of 130 could see a further risk to the downside and look towards the region of 129.60. Spot gold's formation of the three doji candles, known as the tri-star pattern, sparked a bearish move and now looks towards the level of 2,600, which was the objective. A break there could see further scope to the downside and look towards 2,560, where this next trend line holds before any initial recovery. Looking to the top side, resistance on the day seen around 2,624. Having reached its topside target of $77 a barrel, an engulfing candle or a bearish outside range day was posted, and rather a huge candle that could see further weakness into today and look towards the region where this support line comes in at 71 figure 25. Given the fact that the market was somewhat overextended, but the topside target rejection from 77 now puts a bearish play into motion. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed the great start to the